Hey, it's John Long with Ardent Real Estate Group, and the Fed has just cut the rates by 0.25%. What does that mean to you as a buyer or seller? So the Fed has cut the rate by 0.25%, and so what does that mean to you as a buyer or seller? So it doesn't take a direct effect to the mortgage rates as soon as the Fed cuts the rate. So just because last Wednesday they cut the rate by 0.25% doesn't mean that you're going to see a 0.25% drop in interest rates across the board, tomorrow. So, but what does it mean? Eventually, they're not directly tied to the Federal Reserve rate, but eventually, give it time, give it about a month or two, and you're going to start seeing the mortgage interest rates sliding down and following what the Fed has done. And so what really affects the interest rates on mortgages is investors buying bonds in the United States. So what we're getting a lot of right now, which is why the interest rates are about 3.5% and maybe even going down to 3%, is a lot of the economies overseas are not doing as well. So the investors there are buying our bonds. And because of the trade war and everything, we're starting to get even investors here buying our bonds. And then on top of that, the Federal Reserve reduces the rate by 0.25%, which just helps that much more. So right now we're at about 3.5% interest rate for a 30-year fixed. But I think in the near term, maybe in the next month or two, I wouldn't be shocked if we're closer to about 3, maybe 3.25. So what does this mean for you as a seller? Well, it's a good thing that interest rates are low, because when interest rates are lower, buyers have more purchase power, and so therefore they can pay more for your home. A lot of buyers are looking at that interest rate and it's affecting their monthly payment. So it's, they're going to look at your home and say, okay, I can afford a little bit higher of a purchase price and it won't hurt me as much because the rate's lower. So take advantage of that. And then obviously if you're a seller looking to purchase, well, then you'll get to take advantage of that lower rate as well. So, and if you're a buyer, right now we're at 3.5% interest rate. And if you go talk to your grandparents or you go talk to your parents and talk about their average interest rate over their lifetime, they're going to tell you that you're getting free money right now. So take advantage of these lower interest rates. Over the next couple of months, we may even see them going closer to about 3% for a 30-year fix. So that's fantastic. A lot of people are asking, what happens if the market turns and homes drop in value over the next couple of years? Nobody has a crystal ball, and I can definitely see some kind of correction coming, but how strong will it be? We don't know. But at the same time, with interest rates as low as they are, if you are going to wait a year and that property may drop, let's say $20,000 in value, but your loan amount was going to be $500,000, and let's just say an interest point higher, then that's $5,000 a year. Give that 4 years and you're going to make up for that drop in value. So it's either you're going to pay the bank or you're going to pay the seller. Pick which one makes you happier. So, interest rates are great. The Fed has dropped the rates. I think we're going to see even better rates to come over the next couple of months. If you have any questions on interest rates, feel free to reach out to me anytime. John Long with Ardent Real Estate Group.